Hey you guys, I'm going to talk about payroll taxes. So this is something you learned in Principles of Financial Accounting, but I know that was a long time ago, and I would say 99% of my students, unless you're working in payroll, need a good refresher on this. I want you to know this forward and backwards because you're probably working now or will be soon, and this is going to affect you personally the rest of your lives. Certainly if you're an accountant, whether you're working in industry or in public accounting, this is going to affect you from the employer side of things, or if you own your own business, it definitely affects you from both because then you're both the employer and the employee. So chapter 1 in your book covers this extensively. I'm going to go through and explain it, and I'm also going to tell you some of the pitfalls that I repeatedly see on my exams, and hopefully you can grab a hold of that here and really learn this well. I will test you on this on 3 out of your 4 exams, so I think this is really important. All right, the problem I have up here on the board is a problem from your notes, so we'll get to that in a minute, but I'm going to go over all the different taxes that are considered payroll taxes and tell you, again, some of the pitfalls and what I want you to know, what you have to memorize and what you don't have to memorize. So the first thing I want you to concentrate on, number 1, is knowing what the taxes are, right? But whose responsibility it is to pay the taxes. Again, most of you guys are working. If you'll pull up your paycheck stub online for me right now and look at that, it's going to make a lot more sense to you because it's your money. It's familiar to you, okay? And you should know what's getting taken out of your paycheck. Since I've been at UT Tyler, 3 of my paychecks have been drastically wrong. And if I didn't know all of this, I'd just be like, oh, well, okay, I guess that's what I get. So you should know this. All right, let's start with FIT, federal income taxes. That's what the bulk of this course is, taxing our income. So as an employee, who pays those federal income taxes? The employer or the employee? The employee does. That's whose responsibility it is to pay. However, careful reading your exam questions because it might ask, is an employer required to withhold federal income taxes from an employee? That's different than who has to actually pull the money out of their pocket and pay them. So at UT Tyler, I have to pay my federal income taxes on my paycheck, but UT Tyler is required to withhold that money from each of my paychecks. You should read about and know what a pay-as-you-go tax system is in chapter 1. And this is why they're required to withhold it. I cannot tell UT Tyler, oh, you don't have to withhold from my paycheck. I'll run by the IRS office after work, or I'll pay them at the end of the month or whatever. You don't worry about it. I'll handle it. Legally, I can't do that and they can't do that. They are required to withhold. However, it's not their money. It's my money they're paying it with. So read your questions carefully. Who has to pay? Who has to withhold? All right, that's federal income taxes. Notice I don't have a percentage by this because it depends, right? Which bracket am I in? We've got 10%, 12%, all the way up to 37%. So this varies by the individual. Okay, now we'll go to these FICA taxes. This is where a lot of students get confused on what these are and who pays them and what the amounts are. So FICA taxes are made up of 2 things, Social Security taxes and Medicare taxes. I want you to know that. I want you to know the percentages, what the tax rate is. So Social Security is 6.2%. Medicare is 1.45%. You will hear a lot of people say, oh, FICA rates are 7.65%. Duh, because we add those together and it gets to that, right? But here's why we can't always do that. There are things called wage bases, meaning the government only taxes you on, yeah, you've got to pay 6.2%, but only on the first so many dollars you earn. And Congress changes that wage base for Social Security every year. It has a wage base. So you do not need to memorize the wage base because generally for the past years, and boy, we're really up in it now, Congress has increased that wage base. Is that good or bad? Well, it means you're paying more taxes. The more you earn, you're paying more because our government's had a hard time funding Social Security. We keep running out of Social Security money. So they keep raising the wage base on which we tax it. So these are not the numbers for this year, but I'm going to give you a general example so that it'll apply to every year. Suppose this year the wage base was $150,000. once you make over $150,000, you would stop having to pay Social Security taxes, the 6.2%. But then next year, Congress goes, oh, we need more money in that Social Security pot. We don't have enough. Instead of increasing the tax rate, raising taxes, because that's bad for politicians, right? They raise the wage base. Oh, we didn't change anything. It's still a 6.2% rate. But now we've increased it to where the first $200,000 you earn, you're going to pay on. That still puts more money in their tax revenue bucket, right? So that's Social Security. Medicare does not have a wage base. So you could earn $2 million and you're paying Medicare taxes, the 1.45%, on all $2 million. So on an exam, you're going to know the wage base, and it will be up to you to look at it and go, oh, well, in this problem, our person makes only $40,000 a year. That is well below the Social Security wage base, because you'll have that in front of you, that number. And you'll go, okay, so it's 6.2 of all 40,000. They didn't go over the wage base. And in this example, we could do the 7.65% times 40 grand. But if you had someone, and you will at some point, making $200,000, now you're going to have to split it up and go, oh, but only $160,800 is taxed at this, and all $200 of the Medicare is taxed. Okay, so get a hold of that really well. Now, the second thing about FICA that I want you to know is who is responsible for paying FICA taxes? The employee, like federal income taxes, or the employer? So it's actually both. The employee and the employer pay it. Do they just split that 7.65% or what? Nope, they each contribute the 6.2 and the 1.45. They each contribute that. So in total, looking at my UT Tyler paycheck, 15.3% of it should be going into a black hole with the government. No, I mean a nice pot where I can retire and draw this money, and Medicare, of course, has medical, hospital insurance, things like that. So what happens if I'm self-employed? Who am I then? Am I the employee or the employer? I'm both. So if I'm self-employed, not only am I paying federal income taxes on the income that I earn from my business, but I'm paying an additional 15.3% in payroll taxes because I'm both the employee and the employer. See how real quick people can be paying over 50% of what they make in taxes when you consider all of these. Taxes are important if you want to have any money left to eat and buy a house and things like that. So this class should resonate with you personally, but on a business level, this is what we do as tax accountants, help people understand this. Number one, stay in compliance with all of these things. But number two, how can we legally help you plan to keep more money in your pocket rather than giving it all to a black hole? Okay, so I want you to memorize these numbers. You don't have to memorize the wage base, but you do need to know how to work a problem with the wage base. I want you to know that both the employee and the employer are responsible for paying it in equal amounts. They both chip in equally. And now we will move on to FUTA and SUTA. So I always say on FUTA and SUTA, you can just remember that U there, and that'll help jog your memory as to what kind of tax that is. That's an unemployment tax. So the one with an F is federal, the one with an S is state. When people get laid off from a job and you hear about them claiming unemployment, they get it from this fund. The government didn't grow that money on trees. Companies pay unemployment taxes in to the government, and when people need to claim unemployment, it comes from that fund. Sometimes states run out of that money. California has run out of unemployment money before. So every state has a different rule and law about how much unemployment you can get, how long you can draw, collect unemployment checks, things like that, because it's a finite pool of money. Who is responsible for paying FUTA and SUTA taxes? In this case, the employer only. So again, looking at your paycheck, you should not see any FUTA and SUTA taxes being taken out. You should see federal income taxes being taken out of that check, that gross amount, And you should see FICA taxes being taken out of that gross amount. There are a lot of other nuances. I used to teach a whole semester of a class solely on payroll at TJC, so I can't get into that all right now. So you may not be able to take your gross amount and multiply it and get exactly this. Sometimes certain things change it, like for our 401k dollars are not taxed for federal income tax purposes, but they are taxed for Social Security purposes and things like that. So looking at your W-2, box 1 might be different than box 3 and 5. Box 1 wages says these are the wages I have to pay my federal income taxes on. Box 3 and 5 said, but these are the wages I have to pay Social Security and Medicare on. And usually those boxes are different. Okay, so I want you to know ER only. Now, here's where a lot of pitfalls come in. You do not have to memorize these rates because they're going to be different for every company. If a company lays off employees more than another company, they're going to have a higher unemployment tax rate to pay. They got to put more money in the pool because they've got more employees that need to claim it, right? So I'm always going to give you these amounts. I'm also going to give you this information. It's just that students forget what to do with that. So remember how we had a wage base on Social Security over here? We've got a wage base on SUTA and FICA also. SUTA is only taxed on the first $9,000 an employee earns. So say I'm UT Tyler and I've got 1,000 employees who make anywhere from $22,000 to $188,000. Well, that's not true. Our administrators make millions, but only the first 9,000 of any one of those employees gets taxed. So you would take your calculator and take the rate that I give you, and again, I'm going to remind you that it's the first 9,000, and I'm going to go $9,000 times whatever this rate is, so 0.043, and that would be $387. So I'm going to go ahead and write that out here right now. $387 SUTA tax that UT Tyler would be having to pay in. Now here's the one where everybody misses, whether it's in my principles class or my tax class. Definitely not everybody, but so many that it makes me sad. This says 0.9%. Y'all know how to work decimals. Nobody gets confused on the 4.3, but for some reason this 0.9% throws people. If it's 0.9%, to turn that to a decimal, we go 0.009. It's only on the first $7,000. So even though this particular employee made 40 grand, I don't say 40 grand times the 0.9%. I say only $7,000 times 0.009. And that's 63 bucks. Watch, on this first test, a lot of people are going to put $630 because they said 0.09%. So do however you learn to do decimals in elementary school. My little teacher would use a caret and make us move it over a couple of places. I don't know why a caret, but don't miss that. It's 0.009. Okay, so now, one more thing. Let's cover medical insurance and 401k. For purposes of this class, there's no hard and fast rule that says every company's got to pay some amount of health insurance. There are rules regarding health insurance. We won't get into those in this class. But as far as the amount goes, the problem I give you is going to have to tell you who's paying for that health insurance. At UT Tyler, they pay 100% of my health insurance, and it's about $17,000 a year that they pay on behalf of me and my child. Not the case everywhere. So this problem that you guys have says the company pays medical insurance. Let me read it again to make sure that's what I told you guys. You must offer medical insurance on behalf of the ACA, and your company's portion is $500 a month. So what does the company have to pay for the year? Don't forget to extrapolate that to the whole year. $500 a month for a whole year means this company's going to have to pay $6,000 in health insurance. Just because that's what they offered them, not because I'm telling you there's any federal rule about that. Lastly, 401k. So 401k comes from the Internal Revenue Code, Section 401k. That's why it's called that. It's a retirement plan. Hopefully you are working somewhere now that offers one, or your intent is to get a job as soon as you graduate that offers a 401k plan. with professional degrees, we don't ever want to work for anybody that does not offer us a nice retirement savings. If you're working for yourself, that's a whole different story. We got to plan on that. But you should never take a job that doesn't offer you retirement if you've got a degree. So this particular problem said this company will contribute up to 3% of the employee's salary to go into their 401k. So $40,000 times 3% is $1,200. So I'm just kind of listing all of these out here. The last thing I'm going to do is figure out this FICA amount from the company's point of view. So what is this problem asking us? Two totally different answers if the problem is asking you to work this from the company's point of view versus the employee's point of view. So let's look at it from the company's point of view. The company has to make sure they have enough money in their budget to pay this new employee that they're going to hire. And they offered this new employee $40,000. So we know they've got to have $40,000 in their budget to pay them. What I see students do a lot of times is then subtract all these amounts from the $40,000. But if the company has to pay all of these taxes on behalf of their employee, then we need to add that to the $40,000. The company needs to have $40,000 to pay, plus they're going to have to come up with $387 to pay for those SUTA taxes, plus another $63 to pay for FICA taxes, plus they got to come up with $6,000 to pay on behalf of their medical insurance, plus they got to come up with another $1,200 to put into their retirement plan, plus FICA. In this example, I'm just going to say 40,000 times 7.65%. Because they did not go over the wage base. So I have to add all these things together. So I'm going to do that real quick. 3060 plus 40,000 plus 387 plus 63 plus 6,000 plus 1,200. $50,710. Okay, stop. I want you to listen and pay attention to this. I can't tell you how many times I will ask this question on a test, with different numbers, but same question, and say, hey, you're going to pay this employee $40,000. How much do you need to budget for the year? And you've got to go through and do all these payroll taxes. And somebody will come up and tell me $3,060. How are you only going to budget $3,060 when you've got to at least pay them the $40,000? So don't forget, after you work a problem, to take a step back, read it again, and check it for reasonableness. Oh, of course I'm going to have to budget more than $40,000. That's their bare minimum. That's their salary. Whatever number I come up with better be more than $40,000, right? Okay, now let's look at it one more way. Let's look at it from the employee's point of view. If I'm asking you to figure out how much the employee's net salary is, number one, we would need to know, do I need to know for the whole year? Are you looking at one paycheck? Is it biannual? Do they get paid monthly? Whatever. But for the whole year, that's when we subtract it, because the employee starts with a gross salary of $40,000. But you guys know you don't get to keep all of that on your check, right? Man, they take out stuff left and right. So the employee would then subtract FICA, because they also have to contribute $3,060 for FICA. The employee would not have to subtract anything for SUTA and FICA, because you know now employees don't have to pay for that. Medical insurance depends on what the problem says. At UT Tyler, I don't have to pay for my medical insurance. Most companies, you do have to pay something for it. So that's going to be on a case-by-case basis. 401k, a lot of companies will not contribute to your 401k unless you are also contributing. So make sure you contribute or you're just throwing money away. At UT Tyler, they contribute 8% of my salary as long as I contribute at least 6%. So heck yeah, I'm going to contribute at least 6%. Otherwise, every year, I'm throwing away 8% of my salary that UT Tyler wouldn't contribute to. And whatever my contribution is, obviously, reduces my paycheck. And then lastly, federal income taxes. Notice for the employer's point of view, we did not have to budget an amount for federal income tax. Employers don't pay for our federal income tax. They withhold it, turn it over to the government. They don't pay for it. But as an employee, I would need to reduce my gross check by whatever that withholding is for my federal income tax. In this case, this particular employee would be in the 12% marginal bracket with a $40,000 salary. But we know that doesn't mean all 40 grand gets taxed at 12%. So I'm not gonna go over that point, but just making sure you know which side you're on there. Okay, I don't think I can think of anything else to tell you payroll wise for purposes of this class. Again, it goes a lot deeper. There's a lot more to it. If you're working in payroll or in a CAS, Client Advisory Services Department, you'll get a lot more into this. But that's what I want you to know well for this class. When we get to a later chapter, we will start focusing a lot more on self-employed. You'll usually see that written SE, self-employed taxes and how that works. But this is it for chapter 1 and for your first exam.